Problem 2-2B. In this problem, we are going to go through transactions for the month of May for Iris Beck, who is a licensed CPA. So we will first journalize the transactions, then post them to each individual account, and then prepare a short trial balance. So the first date is May 1st, and it says Beck invested $20,000 cash in her business. So the business is receiving cash, and owner's capital is increasing, so it's a credit. Then on the next page, we want to increase or post to each individual account. So we have a debit to cash, and that's our cash balance now. And we also have a credit on May 1st to owner's capital. Okay. Also, so the next transaction, it says on May 2nd, they hired a secretary at a salary of $2,000 a month. There's no cash transaction here, therefore there's no journal entry. So we skip to the next day, which is May 3rd. And it says purchase $2,500 of supplies on account, meaning that the company increases the supplies that they have, and it's on account, so accounts payable is credited, i.e. increased by $2,500. Now we post to each individual account. And we have a listing for supplies and also a corresponding credit to accounts payable. On the transaction for May 7th, it said paid office rent of $900 cash for the month. So we have an entry for May 7th for rent expense. And it was paid in cash, so we want to credit cash for $900. So again, we go to each individual account. We have a credit for cash for $900, which reduces the balance of cash. And we have a corresponding debit for $900 for rent expense. Okay, the next transaction is May 11th. It says completed a tax assignment and billed a client $3,200 for services performed. Since there was a bill for services and the company did not receive any money, and accounts receivable is generated, i.e. it's a bill for the services provided, and there's a corresponding credit to service revenue. Then we go to the corresponding account. So we have an increase to accounts receivable, and an increase of credit to service revenue for $3,200. Then the next day is May 12th, and they received $3,500 in advance on a management consulting engagement. So what it means is that this company is going to provide a service sometime in the future. So if they receive the cash today before performing the service, that means that the revenue has not been earned and is considered a liability. In this case, an unearned revenue, which is credited. So on the 12th, again, we receive cash and it's considered a liability, which is credited, an unearned revenue. Then the next day is May 17th. And the company received cash of $1,200 for services performed for Misper Company. So these services were performed previously, and now the customer is paying off their bill that they owe the company. So we want to debit cash $1,200 and credit or reduce the amount that's owed, i.e. accounts receivable. So we have a debit to cash. So our balance is going to increase. And accounts payable is going to decrease. Okay, the next transaction on the 31st says that they paid the receptionist $2,000 salary. So we have salary and wages expense that we debit and credit cash for $2,000. Then on the corresponding accounts, we reduce cash by $2,000. And we increase wages expense by $2,000. And the last transaction on the 31st is that we paid 60% of the balance due to Tenio Company, which was May 3rd. So we paid 60% of that transaction. So if you notice on May 3rd, it was an accounts payable for supplies that we now debit because we're paying off part of that $2,500 bill, and we credit cash. So here we have $25 that was owed originally. We take 60% of that, and that's $1,500. And we credit cash for $1,500. So here on the 31st, we credit cash for $1,500. And accounts payable is reduced by $1,500. So the balance is now $1,000. So the last part of this exercise is to create a trial balance. So all we need to do is take the account balances from each and every account. We just add them up. We just copy them over first. Then we total them up. So remember, our assets are debited, and now we credit our liabilities. And then we also debit our expenses. Okay, so our total debits equal our total credits, so meaning that we journalized the transactions correctly. And that is the end of problem 2-2B.